Welcome to today's What Moved the Market show. I'm your host Prem. It's Friday, November 7, 2025, and here is everything you need to know as the markets close for today. Indian equity markets staged a remarkable recovery today after testing intraday lows, with the Nifty 50 closing at 25,492, down just 17 points or 0.07%. The Sensex settled at 83,216, declining by 95 points or 0.11%, while Bank Nifty ended at 57,554, down 273 points or 0.47%. The session began on a weak note, with global risk-off sentiment weighing heavily on domestic markets. The Nifty tested a low of 25,318 before strong buying emerged in metals, banking, and auto stocks during the afternoon session. This marked the third consecutive session of losses, though the sharp intraday recovery demonstrated resilience at key support zones. On the currency front, the Indian rupee closed at 88.67 against the US dollar, hovering near record lows despite Reserve Bank intervention in offshore and derivative markets. The central bank continues to defend the 88.80 level, with state-run banks actively selling dollars to support the currency. The rupee's persistent weakness reflects sustained foreign capital outflows and broad dollar strength, though RBI's strategic interventions have prevented a breach past critical psychological levels. Today's biggest winner was Shriram Finance, which surged 3.81% to close at 817 rupees, emerging as the top Nifty gainer. Bajaj Finance climbed 2.66%, while Adani Enterprises added 2.61%. Tata Steel gained 2.39%, and Bajaj Finance rose 2.27%, with the metal and financial sectors supporting the recovery. On the losing side, Bharti Airtel was the worst performer, plunging 4.46% to 2,001 rupees amid a massive block deal where Singapore Telecommunications sold around 0.8% stake, worth approximately 10,300 crore rupees. The transaction was priced at a 3.1% discount, triggering heavy volumes and profit booking. Tata Consumer Products declined 1.97%. Tech Mahindra fell 1.87%. Apollo Hospitals dropped 1.89%. And InterGlobe Aviation lost 1.55%. In the broader markets, Nifty Midcap 100 gained 0.63%, while Nifty Smallcap 100 declined 0.16%. L&T Finance emerged as the top mid-cap gainer, surging 10.65% after reporting strong retail finance growth. BSE jumped 8.61%, and Vodafone Idea added 3.67%. For Nifty 50, the index successfully defended crucial support at 25,500 and the trendline support zone between 25,500 and 25,300. This bounce from the demand zone suggests buyers are active at lower levels. Immediate resistance stands at 25,600 to 25,700, with a sustained move above required to restore bullish confidence. A break below 25,400 could trigger further selling towards 25,300 to 25,100. Bank Nifty held its 20-day exponential moving average support around 57,500 to 57,300, with the index bouncing sharply from intraday lows. Resistance is pegged at 58,200 to 58,300, and only a decisive breakout above these levels would signal trend reversal. On the downside, a breach of 57,300 could accelerate weakness towards 56,800. The metal sector emerged as the strongest performer, gaining 1.41% as buying interest returned to commodity stocks. Financial Services 2550 advanced 1.22%, while PSU Bank added 0.87%. Auto gained 0.57%, and Pharma rose 0.36%, providing much-needed support to the broader market. On the losing side, IT declined 0.62%, despite strong quarterly earnings, weighed by global tech weakness. FMCG fell 0.49%, consumer durables dropped 0.72%, and telecom slipped amid the Bharti Airtel block deal. Realty and infrastructure also remained under pressure with marginal declines. SEBI Chairman Tuhin Kanta Pandey announced at the CNBC TV 18 Global Leadership Summit that the regulator will comprehensively review listing regulations, or LODR 2015, by simplifying norms, removing redundant provisions, and filling gaps. The chairman emphasized SEBI's stance of optimum regulation, aligned with making Indian markets future-ready through smarter and forward-looking regulations. Additionally, SEBI amended ICDR norms to broaden institutional investor participation in IPOs. The overall reservation for anchor investors has been increased to 40% from 33%, with 33% earmarked for mutual funds and 7% for insurers and pension funds. These changes take effect from November 30, 2025. The regulator also urged social media platforms and search engines to strengthen safeguards against fraudulent investment activities and fast-track mandatory advertiser verification. Reserve Bank of India Governor Sanjay Malhotra emphasized that recent easing of banking norms, including acquisition financing and external commercial borrowings for real estate, comes with appropriate guardrails while displaying courage to support the real economy. He stated that the RBI possesses ample tools like risk weights, provisioning norms and counter-cyclical buffers to contain emerging risks. Crude oil prices on MCX advanced by 48 rupees or 0.91% to 5,310 rupees per barrel, tracking firm spot demand. Globally, West Texas Intermediate crude rose 0.5% to $59.73 per barrel, while Brent crude gained 0.46% to $63.66 per barrel. MCX gold has climbed a bit. Silver surged ahead too. In the physical market, gold prices in India stood at 1,21,180 rupees per 10 grams, while silver was at 1,52,500 rupees per kilogram, reflecting steady demand for precious metals amid global uncertainties. Global markets remained cautious amid persistent geopolitical tensions. The ongoing conflicts in Eastern Europe and the Middle East continue to drive commodity volatility and risk-off sentiment. The US-China technology rivalry and trade tensions remain elevated, though recent diplomatic engagements have provided some relief. Asian markets traded mixed this morning, with most indices showing weakness. Taiwan reported its fastest export growth in nearly 16 years, driven by AI chip demand, providing a bright spot. However, broader sentiment remained cautious ahead of key US economic data releases and ongoing foreign institutional investor selling in emerging markets. For Monday's session, Nifty 50 faces a critical test at the 25,500 level. A sustained hold above this support could trigger a relief rally towards 25,600 to 25,800. However, technical indicators suggest caution, with the index forming lower highs and lower lows for 5 consecutive sessions. RSI at 49.76 indicates fading momentum and potential consolidation. Bank Nifty's outlook depends on holding the 57,500 zone. A bounce from current levels could target 58,000 to 58,100, but resistance at 58,200 to 58,300 will be crucial to overcome. The index trades below its 10-day exponential moving average, suggesting a sell-on-rise strategy until a decisive breakout emerges. India VIX rose 1.18% to 12.51, indicating slightly elevated volatility expectations. While still below the 15 threshold that signals high volatility, the UPTICK suggests traders are positioning for continued uncertainty. Today's key takeaway: the market's ability to recover from intraday lows of nearly 500 points on Sensex demonstrates strong buying interest at support levels. With Nifty consolidating between 25,300 and 25,700, traders should focus on stock-specific opportunities in metals and select financials that showed strength today. For short-term traders, 25,500 remains the critical make-or-break level for Nifty. A sustained breach below could accelerate weakness towards 25,200, while a move above 25,700 would signal bullish momentum returning. Bank Nifty traders should watch the 57,500 support closely, with risk management remaining paramount in this volatile environment. Have a great weekend and stay tuned for tomorrow morning's wrap. If you have questions about today's market action or want to discuss specific stocks, send them our way. Until next time, this is Prem signing off. Happy investing.